Gary, does the timing of the open and closes of H4 candles matter, as brokers have different open and closes timing? Many years ago, we tested specific candlestick patterns, and we tested them across different broker timeframes, open and closing timeframes. And so, you know, some brokers have New York close charts, some brokers have London. It just really depends. And so the thing about it is that we tested those candlestick patterns across multiple server times and open and close times, and we did not see any statistical difference. Now, it's been a while since we've done that, but I don't really consider this a worthy venture, nor too important, because we are not candlestick pattern traders. The opening and closing of one candle or another becomes pretty immaterial. The opening of one candle rarely ever is going to make or break the difference in what's going on in the overall order flow. But I can tell you, as someone who has access to 6 days a week institutional reports from various FX desks and equity desks. I get reports from equity desks, fixed rate desks. I get access to a lot of institutional reports, and none of them ever mention this, ever. They never do, never. And what they are doing is spending a lot of time writing reports about what does matter, and there is never in their report a feature of, oh, this one candlestick pattern, these two candles, these two bars. Oh, wow, that's everything right there. That's reason for me to put the bank's money on the line. We're going long or we're going short based on this. That never happens. They are always looking at a lot of things. They're looking at sentiment, they're looking at flow, they're looking at technicals, they're looking at macro, they're looking at any combination of those. They're never looking at all four. I've never seen any of these institutional reports from B of A or Credit Agricole or Deutsche Bank or JP Morgan or Goldman or whoever, or Morgan Stanley. I never, of all the reports that I get, some of the Canadian banks as well, of all the reports that I get, none of them are ever talking about, oh, there's a pin bar here, we're going long. Oh, there's a fakey pattern, an engulfing pattern, and we're going short. Oh, well, this is a new setup for us. No, they're never talking about that. Never, ever, ever. And I've been reading their reports for years, 6 days a week. They are never, ever talking about that. And if they do talk about it, it's like once in a blue moon's blue moon kind of thing. And even then, it's never in isolation. They're never sitting there going, oh, well, there's an engulfing or there's a pin bar pattern here and we're going to go long and not talk about anything else. They never do that. Every trading desk of every bank has a different focus. There's someone who is the lead of that desk. And yes, they have traders that have their different styles, but by and large, all the people who are writing these reports, they are not talking about this. They have their own style, and that some of them could be Fibonacci analysis, some of them can be fundamental traders and then using some technicals. Some of them could be using flow-based analysis. Some of them could be using sentiment-based analysis, or any combination of those four. And anytime they analyze the charts, whatever technical methods they're using, they never, ever, ever mention pin bars, fakies, inside bars, engulfing bars. They never mention that. And if any trader wants to debate this with me, I'll be happy to go toe-to-toe with them on a live webinar and show them report after report after report after report after report after report. I can do this till I'm blue in the face and turn 150 years old. This whole issue, this whole narrative about New York closed charts are important is the biggest BS thing that's ever been pushed upon retail traders ever. It is so immaterial. It is so not what professional traders are talking about. It's not what institutional traders are talking about. They're talking about what's important. And this never comes up, ever. It is the biggest farce of marketing in the retail trader world that has ever been perpetuated. As long as I've been in this game, it is the biggest farce. And if any retail trader worth their salt did the time and investigation and was actually to go through these reports, they would see that the people who perpetuate the narrative that New York server time close charts are important, that pin bars are great signals, that this is what institutional traders are looking at, that inside bars and fakies and all these other things, if any retail trader worth their intelligence, if they had, you know, just 100 IQ points and did the research and really looked into this, they would realize that that is the biggest farce that's ever been told. And so the answer to your question is no, it doesn't matter.